In April 2020, as we headed into our first lockdown, thanks to COVID, we decided to have a go at making a podcast. As such, the Marcus Oldham AgTalk podcast was born. At the time, we had no idea where it would go or if anyone would listen. The premise was to present to the audience people I've met along my ag career who have taught me something about the business of farming. In hindsight, the podcast series did take a few left and right turns as I looked to also bring new topics which I believe are important for people working in this sector to get their head around. The response was great, so the team has agreed to saddle up again for another year. So in 2021, for your listening pleasure, I hope to bring you more people who are passionate about the business of farming and the issues we need to focus on as we negotiate the ups and downs of farming. It's my pleasure to welcome back Robert Hermann to the AgTalk podcast. Robert is Managing Director of Mecardo, and last year he made himself available to us to talk about prices and things, which I found very interesting and very helpful with regards to my own business. So welcome, Robert. How are you?
Good, thanks, David. Thanks for having me back again.
A pleasure, mate. Let's start, I think, one of the things we don't often do is look back and say, okay, what were the fundamental things that we can take out of from last year with regards to especially the global macro factors that affected my prices as a producer? What would be the sort of the big hit things you'd be thinking about?
Well, I might be a bit disappointing here for you, David, because I think the big drivers we've got to acknowledge, first of all, that our prices went up. So whether we're talking about mutton, lamb, beef, some went up by more than others, but they're very good. But they were pretty much driven by local situations. You know, the breaking of the drought couldn't have come at a better time for livestock producers because we've seen this in meat prices overseas, the immediate hit on consumers from COVID was offset almost identical timing by the breaking of the drought. So we suddenly had a new buyer in our livestock markets, and that was the restocker. So I know we really need to focus on global influences on price, but I think the year just gone by, there was a big global influence on price, but it wasn't strong enough to offset the domestic influence, and that was what happened with the breaking of the drought. So
the sort of the lucky country type scenario again, by happenstance, we find another buyer that offset our situation. And as I believe it, and correct me if I'm wrong, is that led to certainly domestic prices which were well above global prices, or what we would expect it if we didn't have that.
Yeah, I think if we're talking about meat, let's separate the two main products. Let's separate beef and sheep meats. In terms of beef, we are now very expensive on a worldwide basis. And that happened up until the drought. We were very cheap, to be honest. We were very competitive. But that shift in the market, and just to give you some context, you mentioned a record price. Well, the Eastern Young Cattle Indicator set a previous record back in February, I think, of 888. A great number to remember, and probably some of us were hoping that was going to be the record because I always remember, but now it's gone through 890 this week.
Yeah.
And that's 30% up on this time last year. So remembering this time last year, the market had already started to rally post-drought. We're 30% up on that. And if we took it back to, if we were talking about these same levels for beef in January, we'd be more than 50% up on January to January. So it's quite significant. But for it is important to consider how our beef competes on the world market, because it has to compete on the world market. And there's no question about that. So we can talk about that. I guess we'll come to that, David. But in terms of sheep, we're a bit of a, apart from New Zealand, there's nobody else doing much in terms of sheep meat exports and lamb exports around the world. And so we are a little bit insulated there. And and given that it's also a much smaller commodity on the world stage than beef, it can find niche markets, I think, where it can outperform, if you like, in terms of price. And I think that's what we're seeing now.
So is there issues about substitution then? Because I would, again, as a lamb producer, I'm always concerned that at some point we aren't a major staple in most parts of the world.
Mm.
And therefore we're a bit of a novelty type product. And we go into, for instance, I believe in the US, we're obviously in the retail space or the restaurant space, not much in the households. What's the price elasticities there? How resilient is a product to the prices that we've got now?
Well, I think we reported last time, David, that in the last 10 or 11 years, each year we've had higher highs and higher lows in the lamb market and the sheep market. And I think what we can deduce from that is that lamb and sheep meat, or just talk about sheep meat in general, it gets the benefit of an increase in demand for meat protein. But it doesn't get hit as hard as the big commodities because it's sort of this little niche thing that can sort of float around on the edges of markets. We don't need a lot of people deciding that they like the taste of a lamb chop to increase demand. And we've got this very static, stable supply that's, I think MLA were quoted of saying that in the last 5 years, we haven't supplied the demand on a global front for sheep meat. We haven't been able to satisfy it over the last 5 years. And the market performance would support that.
So our two main buyers, is it China and the US? Is that correct? Or
Oh yeah, but well, the good thing about sheep and lamb is that we have got a big spread. So
okay.
And some of those markets, well, we saw the Qatar market, which was that little bagged lamb, where there's a merino, usually a merino lamb, a lightweight lamb is slaughtered. It's actually shipped out of it doesn't even get to the chiller in the abattoirs. It goes straight onto a truck. It gets chilled on the way and gets shipped. Well, that market sort of fell over when there was a change in the subsidy arrangements over in Qatar. But because we're so diverse, there's China's taking more lamb, the other Asian countries take lamb, and the US has been a strong lamb market for us a long time. And not forgetting that our biggest individual market is still our domestic market. So we've got this really good spread that sort of keeps us gives us a bit of resilience when something doesn't go quite so well. But it also means, David, that when you've got some underlying demand, it's spread across markets, and people have got to fight for supply. I think a good point to note was, if people remember back to August, and we had that the meatworks got COVID in Melbourne, and they shut up, and the market really plummeted, and it was a funny time because there's very little product going through at that time. It's a quiet time, but the market indicator and what went through, it really collapsed. There was a lot of uncertainty. But what we saw then was immediately after those meatworks got themselves organised again, which was to their credit, was a fantastic effort to get back on track so quickly. It coincided with the increase in supply. So Dubbo, Wagga, Bendigo lamb started to flood through. And so the supply ramped up, but the really interesting thing was that the price took off at the same time. And so we think that there's this very good supply arrangements in place, with processes being the key in that, the linchpin, if you like, but the underlying demand is very good. Now, whoever's, MLA can take some credit, processors can take some credit. It doesn't matter who you want to give the credit to.
Sam Kikovich.
Who's that?
Sam Kikovich.
Well, Sam might have failed, because we're actually, if his aim is a domestic market, we're actually eating less lamb. That's the interesting discussion we're having today in the office here. There's another survey came out saying that there's a lot more people becoming flexitarian and vegan, vegetarian. I mean, it doesn't matter in Australia. It doesn't matter. There's so many more people in the certainly in the Asian countries, and China is a good example, where as their incomes increase and their GDP increases, they're going from vegetarian to flexitarian to trying to get as much meat into their diet as they possibly can.
Yeah, and that's an interesting thing. I mean, we often see in the papers all this thing about fake meat, or whatever you want to call it, and how this is going to take away supply from the meat industry. But the reality is we've got the tsunami of demand from developing countries that the reality is it probably is not going to affect us one iota.
Exactly, David. And there was MLA put out a good statistic. They've identified that the tipping point in those countries is when a family or a household earns 35,000 US a year. That becomes a tipping point where they really start to buy a lot of, I guess, luxury things, but also to start to really include meat in their diets. And in the next 4 years, as an example, the US, I think the households of over 35,000 grows by about 5%. In China, the households over 35,000 grows by 106% in 4 years.
And we're talking big populations.
But it's going, if that scenario continues, where we know that increases demand for red meat, and they know all about it now. You know, the population is so connected. They know, and they can be reached in a targeted way. And one of the good things that MLA has done is actually they know where to target those messages. And so if the messages are getting through, the capacity to buy is there, then the only challenge will be of us supplying it, and the demand will stick. Whether it means the market goes up to another level or not, I don't think that's the question. I think the underlying question is that we will have stronger demand from export markets for our sheep meat products than we've seen in the history of Australia.
So just on that, on the meat, in the meat markets especially, I suppose, and it's different commodities, is it one thing China says and one thing China does?
Well, if you look at the export figures, you would be hard pressed to believe the story that China's not happy with Australia at the moment. You know, I think, and look, they've been importing their imports of meat products. Beef is the best one to look at because it's the biggest one, and the chart always looks quite spectacular. But since 2011, I think it is, those imports have gone up spectacularly, and so that wasn't as a result of African swine fever. That was just a bit more petrol on the fire.
Yeah.
That demand was building, and it was building, I suspect, because the households and the Chinese citizens were demanding that meat product. And of course, the challenge for China is we know that it's a big agricultural zone, but the difficulty what they would be having is ramping up their domestic production to keep pace with their domestic demand.
Yep.
Because, you know, we've just seen their economy seems to have got through COVID better than anyone. I mean, one measure that came out this week was that domestic air travel in China is back to the same levels as it was pre-COVID. You know, we could only dream about that here.
You're not going to Queensland for Easter, are you?
No, but if I got caught up there, I guess it'd be worse places.
Exactly. I'll see if I can organise something. So just on that one, and I suppose with China, what's happening with the pigs at the moment? We're hearing rumours that it looks like there's a third wave or something going through. Yeah.
Well, look, I think we've got to take those rumours seriously as you do, or to whatever extent you do with rumours, because there is some evidence to show that even though China's saying they recovered very quickly, the evidence that they're buying a lot of their grain purchases have flattened out a bit, and their pig prices stayed really high. Their pork price in China has stayed really high. That would indicate that you know, that all is not as well as what they're hoping we think it is. I've got to say, if that's the case, then I'll be proved wrong, because my view was that their response would have been, and we saw some of the piggeries that they built. They were like, you know, quarantine hotels almost. People would be happy to quarantine in. But and that would have, in my view, would have mitigated the risk of infection and spreading. You know, you can lock those places down. So I was of the view that they would recover, and they would recover in a very orderly way, and it would reduce the risks. But, you know, let's wait and see. I think the rumours are very strong, and some of the evidence that's being put out is quite strong as well.
And I suppose the thing we're learning about COVID is that managing these type of things, it's not as easy as it looks.
Not at all.
And you just need one person not doing the right thing, and suddenly all your photosynthesis or whatever it is, things go out the window.
Yeah, and however, those piggeries in China, if you can believe all the news that came out, you know, the pigs are born and never leave the piggery, and neither do the staff. So maybe Yeah, look, I don't know.
Yeah.
Let's wait and see. But there is an incentive for China to be as productive as it possibly can be, because it just makes sense. You know, you look at the prices they're paying for corn and soybean and pork and beef now and lamb and all those sort of things. It makes a lot of sense that you'd be as productive as you could be internally. Of course, one of the challenges with their system is that they haven't modernised their agriculture either. So their progress won't be at the same level as say, somewhere like Australia or the US. And that will, you know, the question then arises, do they have any chance of being able to increase production to match demand? And I think the answer is that it's almost impossible. So that tells us that despite the fact that they might be unhappy with us, David, they're going to be still buying, you know, products from Australia. But we'll get a belt around the ears over a few things, but the underlying demand can't be ignored.
Finishing off on the sheep meats. So as a producer looking forward, what are some of the things that I should keep in my radar to think about with regards to future prices?
Well, and I can hear in the back of the tone of your voice there, David, you've got a vested interest in this.
Never.
Do I start the clock now as an
Why do you think I do this?
I think it's interesting. We've been talking today in the last few days with groups of farmers in Caston and Hamilton and in Ballarat shortly. One of the things, funnily enough, and I don't want this to sound flippant, but funnily enough, one of the things that you should be doing is having a good look at your costs. And are there things that you can do to reduce your costs? The best time to focus on your efficiency, your cost of production, your margins, etc., is when things are good. And I don't think it's talking out of school to say that in the past, farmers have probably not really focused on that when things are good. They've more looked for ways to spend money. And I think there's nothing wrong with that. But we should, on the one hand, be having a look over our shoulder and saying, are we doing things that will actually make the business more resilient? So if prices do come off, will we be in a better position to withstand it? And if we have difficulty getting labour, if our facilities aren't quite so good, our laneways or whatever, you know, these are the things we should be doing that will increase that. But in terms of, I always hate saying this, in terms of the sheep meat, it's hard to say that it's going to keep going up because it's been going up for 10 years now. So it probably won't keep going up. But we also can't see it falling off the cliff. It doesn't look like a normal market cycle is going to hit, because the last time we had this number of sheep in Australia was 100 years ago, David.
Yeah.
And, you know, we had no trouble finding shearers then, but it's a bit of a different story now. But so what we're going to have tight supply. New Zealand's got New Zealand's flock is even more decimated. So if we're the only two countries that can supply sheep meat to the world, and you go back to the points we were making earlier about demand and market access, then we're in a really good position for sheep. And that always worries me saying that. And farmers worried when you say that, because, you know, it's always the year, but something can go wrong. Yeah,
well, that way we've now got it recorded, mate. We can hold you accountable. I'll get you back on at the end of the year. Okay, so let's move to beef. As you said, I suppose, especially with beef, the domestic demand factors have probably been the major player with restocking up north. Yeah, so just want to elaborate on that, and then let's talk about what's happening probably more generally around the world, and what might be, if there are any, dark clouds on the horizon.
After the 2014 drought ended, David, the market price for our cattle market was driven by meat prices, so by demand overseas. This time, it's not the case. And just to give you an example, the cattle indicator is up probably 30%, but the 90 CL price year on year is down 18 to 20%. So the cattle price here has defied the customer. The customer is really buying, is paying less for the beef now than they were this time last year, but the price has gone up. So and the reason for that, I think, is that compared to sheep meats, comparing the two again, is that beef has a lot of competitors in the world. The beef comes from everywhere, whereas sheep meat on an exportable volume basis is quite limited as to where it comes from. So that's a concern for the beef market. And we did some comparison with Brazil, the US cattle price and Australian cattle prices. And, we've always been quite competitive on when you compare apples with apples. So in US cents a kilogram live weight or whatever you want to measure, we're now not competitive. We're way above. Now, so one of two things has to happen. Either the cattle price will fall or the meat price will rise. And if I was talking to you in December, David, I would be very concerned and say, keep watching what's happening in Queensland with rainfall. If the monsoon didn't arrive, then what would happen when prices were so good was that all of a sudden Queenslanders would unload a heap of beef, which would make a hell of a lot of sense, and we would see our market correct very quickly. Now, the monsoon did arrive, and that hasn't happened. So our prices have stayed strong, but it's bought us a bit of time, because all we need for a market to correct, all you need is time. Yep. And if the meat price is going to lift globally, we just need time. And now your follow-up question, David, is, so what's going to make the meat price globally lift? Am I right?
I was going to more say what I would like that to be the case, but I was thinking the opposite. Maybe it's the farmer in me.
Well, yes, I think it is, because I think if we look at what generally drives commodities is GDP growth in the Northern Hemisphere. And at the moment, we're under pressure because of COVID. But I think we can safely say that there's a fair effort being put towards trying to fix that. And let's say that combined effort at some point, improves the situation and economies get going again. And if they get going again, they're going to get going at record low interest rates. We know that people who have been working, households that have been working, have got more money in their bank now than ever before. So we could see GDP growth, and some of the forecasts are quite positive for GDP growth post-COVID to be strong. And if continuing our focus on the cattle market, if we've bought time with the seasonal conditions here, which is still encouraging people to hold cattle, restock, build the herd, reinvest in their businesses, then that time that we've bought may allow the economics to sufficiently change so that there's an increase in the meat price. The meat price overseas isn't expensive on a historical basis. It's not dear. It's got room to move up. It's not as though it's sitting at the top of its level or anything like that.
Yep.
I think my optimism, and it'll balance against your farmer approach, David, is that I would be more betting that we will see an improvement in the meat price as, in the second half of this year globally. That may still not be enough to hold the cattle price at the all-time record level. I mean, that would be overly optimistic and perhaps even a little bit silly, but we should see the Eastern Young Cattle Indicator sit above 700 cents in climate.
So what's happening in the US with regards to breeding numbers and exports and things like that? Are they in a stock building or stock declining or stable?
Well, look, it's not something I've looked at closely in recent times, Dave, but it is something to keep an eye on. And they did build up stocks when COVID first hit because the meatworks closed, the feedlots banked up, there were cattle put back. Now that supply has been digested now, that's settled down. But I think they're a country also that's going to see when the shackles are off, I think we'll see strong GDP growth. We've seen pretty good, employment history in the US. Employment rates have been very strong in the face of a pandemic. So I think that's set up for a pretty good, good outlook going forward. But again, I would say that we're going to continually be compared with, cheap South American meat or the US markets or Canadian beef. There's a lot of competitors out there.
With South America, I've heard that China's done a lot of investment in that neck of the woods to try and increase their availability of beef. Is that correct or?
Yeah, I think it is. The more poignant question, I guess, though, is does that mean that we're going to be competing directly into China against South American beef? I think we'll be competing with it, but we've had such an advantage in that we are considered to be, safer and even healthier beef than other exporters or importers into China. And we don't, once again, we've only got, 7 million cattle here. We don't need big markets to absorb our commodities. So the focus is on going back to what I was talking about before, David, the targeted marking of MLA. They know who are the customers who are concerned about, food safety, etc., and where can we position our product. So I think we'll still be, if we can still stay as a premium product, that will be, the objective. But in the end, even a premium product rolls along on top of the commodity price. So if the commodity price starts to come off, the premium product will come off too. And if the commodity price rises, the premium price gets a shot in the arm as well.
Yeah, so that whole issue about transparency of the supply chain, et cetera, and making certain that we're keeping.
Well, it's a very good point, and at the risk of getting political on your austere podcast, David, we are now at a time when we should really be focusing on setting our businesses up for, and creating more resilience. And I think farmers are doing that. But as a secondary line, and equally important, we should be looking at setting up our industries. And if ever you're going to invest in improving the traceability, the security, the biosecurity of our businesses, the time to do it is when there's plenty of money. And unfortunately, there is some pushback from, I know the government is sort of quite keen to see this conversation come forward, but there's a bit of pushback from some states, I guess, to not fully embrace, the state of the art, if you like, traceability. And I think that's a risk to us. And if you said, what should we look out for? I mean, this week we had a look at Uruguayan lamb prices. And Uruguayan lamb prices over the last 10 years have not gone anywhere. In fact, they're almost at their low point right now. And it's because they haven't been able to participate in the same sort of export markets that Australia does. So that's the risk, but it's also the opportunity. The opportunity is to continue to position our red meat at a level that nobody else can compete with.
So Robert, in summary, if I'm reading the tea leaves correctly, what we're saying is that the outlook looks fairly good. The main factors are stacked up, showing that the likelihood that prices, while there could be some fall from the levels we've got, there's nothing on the horizon saying that we're looking at falling dramatically.
No, and that's right. And remember, there's been a few fundamental changes in the last 5 years. One is that the herd and the flock are at record low levels. And the second one is that we have seasonal conditions that encourage people to try and rebuild and get stock back on their properties. So it's like, if you look at late 2019, we didn't have a restocker buyer who put his hand up anywhere for cattle. Now, and we look at the female slaughter rate, we talked about that before, David, you look at now, and the female slaughter rate has collapsed because people are saying, I want to take those females back and try and build the herd. So the confidence is there, but it's not misplaced either, because as you say, the fundamentals look very strong, very solid. We can't expect record prices every week, but we're certainly going to be, if you run some straight lines on the charts, we're at a new paradigm, and that's likely to be supported for quite some time.
Okay, let's move on to wool. Now, mate, I've got some 32 micron bales in my place. I'm happy if you want to go there in a truck and pick them up and take them, you can have them for petrol money. What's happening? Yeah,
look, you're going to have to pay me to pick them up. I'm not going to waste my time and go there and do it for nothing, Dave. Look, it's funny how many people want to talk about strong crossbred wool now. So I had a friend of mine come in to visit, and he said, the local wool buyer came around and offered him $280 for his bale of crossbred wool. What do I do? He said. I said, build a shed, stick it in the shed and sell a lamb. The lamb's worth the same as a bale of wool. Would you ever think that was going to happen? One of the things, there's a bit of history here, because 2 or 3 years ago, you'll remember exactly, David, but you got paid far too much for that crossbred wool.
We were laughing.
Red hot. You know, the fashion industry decided that they wanted to make fake fur, and crossbred wool was the product. That was a little bit of you were led down a garden path there, I think. So that sort of contributed to where we are now, but also it's just the cycles that we see in those sort of fringe commodities. And the reason I think that's an important thing to think of is that I'll take your crossbred wool. I'll give you $100 a bale for it, because it's very easy to double your money at $100 a bale. You tell me where else you can do that.
Yeah.
I think it's like we were saying before, the outlook for meat, it's hard to see where the danger signs are. When something's at its really low ebb, you never see where the recovery's coming from either, but we know it comes. Yep. There are stories of people, David, going up down to their fruit guards and digging up the old dags and selling them once, when the wool market boomed, because at one stage they were worth nothing and then all of a sudden they're worth something. So I wouldn't get too pessimistic about it. I mean, the challenge is if you're running a really sharp Excel spreadsheet and you start to put in your shearing price and seeing if it covers the wool check, if the wool check covers it and it doesn't, you start to say, well, gee, I think we need to be a bit careful about really applying those hard rules, if you like, to crossbred wool at the moment. But, I spoke to one big crossbred producer in Hamilton this morning. He's building a shed. The government's letting him write that off in 1 year with the investment allowance, and he's going to fill it up with crossbred wool. And if he puts a value on it today, there'll be at some point down the track where he'll make 2 or 3 times the value of the wool that went in today.
So we better get to the main game. What's happening at the other end of the micron?
Yeah. Well, that's a good point. I mean, we're now seeing the fine wool premium. So we're not talking about just the fine wool market, but the premium fine wool gets over medium wool really start to ratchet up. And the reason that's happening is because the drought in New South Wales is ended. And that means the drought affected fine wool, or the wool that's hunger fine, is all gone. So the supply and volume of that fine wool is gone. And it's a very fragile market. It can easily be oversupplied. And that's what happens in a drought. So as long as it keeps raining, we're going to see the micron of the merino wool that's being shorn move back to its normal micron, and it takes the pressure off the genuine fine wools, and they're seeing good prices. Now that will continue.
So when you're talking fine, you're talking 19 micron and less, or finer?
I think in Australia, if you're talking about it in the world, it's 22 and finer is fine wool, but here we talk about 17s and 18s.
Yep.
The one cautionary note is that when we look back over time and look at that premium for fine wool, it shows some really big peaks, but gee, they're sharp peaks. They're like zigzags. They go up very quick and they come down very quick. So I think if we're talking again about resilience in our business and in our industry, don't mess around with good fine wool prices. Take the money.
Yep.
Also, see if you can invest in ways to be more efficient, to produce more, to lower your costs and that sort of thing. Because I suspect that what fine wool premiums do is they seduce us at times to thinking, we look at the product, it's the most beautiful product you can look at. When someone's paying us a lot of money, we think, well, that's fair. And we think, well, that's going to become the new norm. If we use history as a guide, then that's not the case. It's fragile.
Yep.
And we're just looking at Andrew Wood sent us through some fibre market moves. So looking at synthetics, cotton, wool, etc. And they've all moved up in the last 6 months. Wool has moved up the least. So the other fibres have moved up more. So it'll tell us that, and there's some challenges with wool compared to synthetics, because you might have heard in this last week about the logistics of getting wool out of Australia and into China to be processed. Well, if you've got a synthetic factory in China, you don't have that logistics problem. So, I think we've got some more upside in wool when this COVID situation starts to level out a bit again. And
there is a correlation between economic growth rates and the demand for wool, isn't it?
Very strong correlation. We say that because we're wool producers, but there's a very strong correlation between economic growth and fibre prices.
Yeah.
And, I was in Hamilton this morning. It's almost sacrilege to say that, wool is just another fibre, to be honest. But if we look at what drives the price, in 9 times out of 10, it is what fibre prices are doing. We get little ructions where we move out of the loop, but generally it's the fibre price that is driving the wool price, and that's by the economics.
And the relativities sort of stay the same.
They do stay relatively the same. And when they get out of order, I mean, it's a pretty easy pick to pick what's going to happen, because it's been very consistent in the past, David.
Yeah, terrific. Any last messages, Robert, for farmers that you'd want to pass on at this stage?
Well, no, I don't want to sound presumptuous, but we certainly where we're located, David. You're down at Geelong. Your farm's in Casterton. We're in Ballarat. We've got some interests in Western Victoria. We've got to be honest and say that this fantastic time we're having on the farm is partly our good work. It's partly the markets, but it's a damn big part is the season. And our area has had fantastic seasons. And what that does is, you well know, it lowers your costs, it increases your production. If we recognise that, and you said, what tips have I got, I guess, then it tells us that this is not going to be around forever, these conditions. So we need to make hay while the sun shines. And that means, taking the opportunity to set our business, whether it means expansion, whether it means increasing stocking rates, whether it means improving sheep handling facilities, whatever it is, make the decisions to use this time to make sure that we've got on a business level now, a more resilient and stronger business, but on an industry level, that we've got something that in 20, 50, 100 years' time, we're still talking about. And whether it's sheep or whether it's cattle, a lot of the same principles apply.
Terrific, Robert. Well, I think that's a good point to finish today. I'm hoping I can get you back in about 8 months' time, and we can have a chat about what's happened and what's going on, and just recap on what we talked about today. Thank you.
Yeah, we'd love to come back, and we'd love to have you come on our podcast as well, David, and well done. Thank you.
Thanks, mate. Thanks for listening to this week's Marcus AgTalk podcast. Please, any feedback on the series would be greatly appreciated. You can either leave a message on this site or email me at cornish@marcusoldham.vic.edu.au. Stay tuned to next week's podcast as we continue to explore farm management from an Australian perspective.